And I mean, just to be clear, swing traders thrive on volatility, right? So if you're a long-term hodler, you're just loving that market slowly going up day after day. For me, which is a much shorter time frame, I love the big ups, the big downs, the big ups, the big downs. And as long as I can read the pivot points, the levels, the supports, the resistance, it's amazing for swing trading. So yeah, it's been quite the year, both in stocks as well as in cryptocurrency.
Hello and welcome to Wealthy Value. In today's video, Chief Market Strategist at themoneystocks.com Gareth Soloway updates about the recent price movements in the US dollar, stock market, Bitcoin, and other cryptocurrencies. Gareth reveals whether the Bitcoin bottom is in or not, and where we will go next. He also explains the chances of a global recession and the key factors leading up to it. Make sure to stick around till the end of this video where Gareth Soloway shares his Bitcoin outlook for the next 2 to 4 weeks and his take on the Bitcoin versus Ethereum comparison. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
We're going to find out very quickly that the Fed has raised interest rates too quickly. So they've tried to play catch up. They finally realized that the free money printing presses were a detriment to the system. It caused massive inflation. They weren't prepared for that. So what do? I mean, it's human nature 101. We like to think the Federal Reserve is immune from this, but they aren't. And essentially, they went into massive hiking. And what that did is it slammed the brakes on the economy here. And I think we're slipping into a recession. I think by year end, we'll probably be seeing that. My guess is, the dollar again, once the printing presses start up again, you'll see the dollar continue lower. And again, I don't know if the printing presses will start up this year, but I think 2023, you'll see easing, at least in interest rates, versus tightening or pause. And I think that, again, a lot of people will say, oh, the stock market should rally on that. I disagree. I think that with inflation remaining high, and my guess is it'll come in to like 5-6%, you're going to see that we have a scenario where the Fed they can lighten interest rates or bring interest rates in, but they cannot stimulate like they have in the past to get us out of a recession. And my biggest fear is that we're going to be stuck in kind of this gray recession. It may not be ridiculously hard, but it's just going to be a long drawn out recession, because if you look at past recessions, right, the Fed has always come out gangbusters. And this situation, this time they can't do that. And that's my biggest fear, is that, we may just see a long period of time where the Fed just can't do anything and the markets, the economy is kind of in the doldrums. So believe it or not, I'm kind of counter, and I've generally made a lot of money being counter trend to what most investors will think, or even the media kind of spews, and I found that to be very successful. So when everyone's lobbying and saying, hey, listen, the dollar is going to continue to rip, you got a war with Russia invading, and that's making people go to the dollar. You got all this fear out there, global recession. I look at the chart and I just say, okay, well, let me look at the chart. That's the true form of honesty. And what you could see here is you have some big trend lines that we just slammed into. So I actually went bearish on the dollar. And in doing so, I've accumulated some crypto, still in some. I've taken some profits on the latest run. But basically, weakness in the dollar is good for gold. It's good for cryptocurrency. It's even good for tech stocks. And we've seen a real move up. So if you look at the dollar, this is the weekly chart. You can see we actually had a nice pullback right after hitting this area. And, you'll get some bounces in the dollar because it's a strong trend. But overall, I think the dollar has more downside to go, which means that Bitcoin and cryptos should actually catch a little bit more of a bid here, probably to, Bitcoin 25.5, maybe 28, 29, 30,000 over the next few weeks. Basically, if you look at this chart, right, so we slammed into this level here, which was the 2017 high, and we got below it. We saw the Voyager collapse, the Celsius collapse, Three Arrows Capital. I mean, all of that was bearish signaling, but the daily never had more than one close below the 2017 highs. It never had a secondary one below the lowest point here or anywhere. And that to me was telling me that smart money was buying in. And again, when you take that signal that you're still able to kind of, even though you get below the 2017 highs, but you fight back very quickly, that's number one, that's a bullish sign. But then if you look at the dollar and you say, okay, well, dollar's ridiculously extended. If the dollar starts coming in, that's good for commodities, which Bitcoin, you could arguably consider it a commodity now. That's good for crypto as a whole. It's good for gold. So to me, that was a good signal. And usually when the dollar pulls back, it's a risk on indicator. So when there's panic and there's fear, everyone still runs for the dollar. As much as you and I know that the government will continue to run up debt over the next 10, 20, 50 years, we're still kind of the strongest house on the street. And so
Yeah.
when fear comes out, everyone wants to go into the dollar. So when the dollar falls, what it tells you is that people aren't as fearful, and by default, they're willing to take on more risk, thus buy cryptocurrencies. So I think that you're seeing the dollar pulling back, which is kind of a rising tide lifts all boats mentality. So you're seeing money flow back into crypto. And what that's going to do is it's going to basically bring a lot of the bulls back out of kind of the forests, if you will, or the closets. And they're going to get real bullish again, saying, okay, the bottom is in. I had that short-term pivot right here at 25.5, but I think maybe we could even get up here. But ultimately, this would be kind of my max level, this 28, 29, 30,000 level. And then I still think we have that one more flush, like you're thinking, is where, you had with the 3 hours capital and Celsius and all these Voyager type scenarios, and even Terra Luna, you had a lot of kind of fear and panic. And that's usually the note of a short-term bottom. But I don't think it even reached close to the level of capitulation where you have people that are really like just, oh my goodness, this is the end of the world. Now, again, a lot of people feel like it is because they bought in at 60 or 65,000. But in reality, if you look back at 2017, that peak, when you bottomed out, like no one even spoke about Bitcoin. I mean, or I shouldn't say no one, but I mean, it was almost like that the crypto wasn't even in the vocabulary anymore. And I think we have to get back to that point. And I think it's important for investors to realize that this is the first bear market in crypto where the Fed hasn't been printing money, has been tightening, and inflation is high, which means it's hard for them to print more money again. And, keep in mind, past corrective moves on Bitcoin, 80 to 85%. We haven't even done that. And according to the metrics, it could be worse than that because of the fact that, again, you have inflation and you have a Fed that's tightening. So again, there's lots of false bottoms in bear markets where it kind of lures people in. My guess is this scenario. Now, for swing traders like myself, it's awesome. We get long, we make money, we exit, we look for the next flush. But again, I think it will, once you get up to these upper ranges, these two lines, you'll see lots of bulls coming out. And I think that is the signal that you're going to have that next move to the downside. One other thing I'll show you guys is if you take the top from 2021 from November and you stretch it to this top, look at this trend line as well. It's almost coming right down to this area, right? So that 28 to 30,000 level. And that, again, that's why if we get up there, I think that's my max upside level on Bitcoin. I think we probably hit 25.5 or 25,000 within the next week. And then you'll see some resistance there and some chop, and then one more leg up going into that. And then after, probably outside of a month, we start our next leg to the downside. And again, really, if you look at the chart, I mean, what type of pattern is this? Well, it's a bearish pattern, right? Just like right here, right? Down move, sideways consolidation, down move, sideways consolidation. So it's just replicating what has happened in the past. Even over here, I mean, big down move, sideways consolidation led to further downside. Now, there is something that I'm watching, right? So this downsloping trend line, if price were to establish itself above that for, let's say, a week or two and really hold above it, then I would start to say, okay, maybe the low is in. But until that happens, the trend, I mean, it's called a trend line for a reason, right? You're connecting the high pivots. As long as that's in place and it hasn't really been held above by price, you have to think there's more downside. Yeah, I think for the most part, Ethereum percentage-wise was down so much more than Bitcoin, right? So if you look at almost 5,000 to a low of almost 800 percentage-wise, that was a massive, massive sell-off, as opposed to Bitcoin, which was a big sell-off as well, just not as much. So it makes sense that, that one beaten down so much is going to get the bigger bounce. It also tends to lead. Sometimes we've seen altcoins lead. It's a perfect example of risk on, right? I mean, the altcoins are definitely the risk on assets. Bitcoin is more the old trusty commodity. I think the dollar strength has probably kept the Bitcoin chart down a little bit because, again, if you think about what Bitcoins are traded in US dollars or stable coins that track the US dollar. So I think that's been one of the reasons why Ethereum, which is more like Ethereum, to be honest, is more like a stock. in that it has a use case, right? It makes something, or at least it helps people do something, versus Bitcoin is just basically a commodity. In fact, Gary Gensler, I think this morning on CNBC, was basically saying that. He said, most coins out there are more like stocks versus Bitcoin more like a commodity. So I think the Ethereum is leading it like a stock bounce, while Bitcoin is kind of languishing because the dollar has been so strong.
By the way, would you like to pay zero taxes on your crypto gains? You can do this by investing in crypto with your IRA. Here's how to do it in 3 simple steps. Step 1. Open a crypto IRA account with our friends at iTrustCapital, the world's largest crypto IRA platform with over $5 billion in transactions, over 2,000 5-star reviews on Trustpilot, and no monthly fees. Step 2. Transfer your existing IRA, roll over your employer plan, or make a cash contribution through ACH transfer, bank wire, or check. Step 3. Start investing. Available assets include not just Bitcoin and Ethereum, but also Cardano, Chainlink, Polkadot, and all major cryptocurrencies, as well as physical gold and silver. No taxable events mean no complex tracking needed, and security is the best in the industry. All digital assets are held in offline cold storage with the leading institutional custodians Curve and Coinbase Custody, which are both insured and backed by the largest venture capital firms in crypto. Use our link in the description below and get $100 in Bitcoin after signing up. So what are your thoughts about Bitcoin bottom? Is it in yet or not? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.